All right, Albert, when you're ready.
Awesome. All right. Thank you everyone for attending here. Today, again, we will have our monthly Web3 Startup Pitch event presented by Blockchain Founders Group, where again, we will present promising early stage blockchain startups. Today, we're joined by 4 interesting startups, Web3 startups. And before that, I would like to move into the agenda. We'll have our startups pitching today. We have also joined with our 2 judges. And at the end of the presentation, we will have top 2 teams announced, and then that's it for today. Before we move into the judges presentation, I would like to present myself. My name is Albert. I'm program manager at Blockchain Founders Group. Today, I'm joined with my colleague Melissa. She is also the organizer for this event and our event at Blockchain Founders Group. Briefly about Blockchain Founders Group. We are a venture capital and a company builder with strong European roots, and we are based in Germany. Our portfolio consists of more than 40 plus blockchain companies. Within our venture capital activity, we finance founder teams in the early stage Web3 business models, where we invest up to 500K per team. Within the company building, we turn blockchain ideas into companies within a short amount of time. We did this through our incubation as well as our accelerator program called Superstars and Adrenaline Program. And yeah, next slide, please. So the BFG has been founded and initiated by the executive team. Our POD and executive partners combine many expertise, including regulatory framework, proven entrepreneurship, academic background, as well as VC and PE investment. Our executive team on the right side combine many years of experience in the financial sector, business, as well as consulting, legal, and working closely with various startup corporate companies, as well as ensuring good regulatory framework for our startup teams. So moving on, this is also the BFG core team. This is the people, including me, Melissa, and our colleagues. We are the one that's running the engine behind the scene, and we are the one that support our startup teams during and after the incubation program. So moving on, today I'm very happy to be joined by our 2 amazing judges. I would like to give a stage for them to quickly introduce themselves. Let's start with David, please.
Hey all, nice to see you here. Well, I'm David. I'm an associate at Turing Capital. Turing Capital started as an asset management firm for digital assets, but we have evolved to become, one could say, a merchant bank for Web3. So we have many different services from buying Bitcoin over the counter. We have an NFT for market making for NFTs. We also going to open a venture capital fund after the summer. And the division I lead, that I started at the beginning of the year, is the advisory division for startups. So here we help startups that are in their fundraising time, and we help them with how to structure the round, at which valuation, that is according to the year we are, and how to raise the money. They receive a SAFE or a token, SAFE plus token, and we open the doors to our network of venture capitals and friends that we have built over the years. They are very dear to us. They trust our judgment a lot, and very happy to work with us, like all top tier, purely Web3 venture capitals. We only work with Web3 venture capitals. Previous to Turing Capital, I formed my own venture DAO, venture capital DAO, and with a focus on Spanish and Latin projects. And previous to that, I worked in Accenture, not related to blockchain, mostly like energy and commodity trading companies. We did some projects on traceability using blockchain. That is me. Thank you so much for your time. Looking forward to hear what you guys are building.
Awesome. Thank you, David. Next stage is yours, Presence.
Cool, thanks. Nice to hear your intro, David. Nice to meet you. I'm Presence. My journey, I guess I can share, where I was studying economics at LSE in London, kind of fell into the Web3 world after starting a podcast, Web3 Gen. And then, yeah, it was like an NFT rental startup, worked on that for a year. It led me to like kind of meeting a really big ecosystem of people like family offices, VCs, builders. So we started to create this ecosystem of builders and investors with the goal of helping startups have a high chance of success. So what we do is we basically fund and give them resources that they need to succeed. So people who worked on Cool Cats, Axie Infinity, London Real Ventures, MGS Gaming Studio, we all kind of work together to help startups grow under Web3 Gen. We also have BBA, which is we also do AI and Web3 startups as well, but Web3 Gen is more like Web3 startups. So been building this for the past 6 months, really big ecosystem of really top tier people building in Web3, all aiming to work and collaborate together. So yeah, excited to meet everyone and get to know what everyone's building.
Great,
Amazing.
thank you, David.
Thanks
and
so much.
Yeah.
Now I'll move on to introduce each of the startups that we have pitching today. So first we have Team Tide, a Web3 analytics and marketing protocol that can help you acquire and also retain valuable users. And after that, we will have Team Profiler on to pitch. They're a Web3 personal data relationship and permissions marketing platform. So third to pitch would be Modus. They are the first fully compliant and decentralized blockchain platform, allowing entry into the UK property market. So they say that you can enter for as low as 100 USDC. Lastly, we have Team Creatorhood that brands themselves as a stock market for culture. So we'll have these 4 teams on today. Each will be given 6 minutes to pitch, and then they will face 5 minutes of Q&A from our judges. And if time permits, we can open up to the floor for questions. So each startup will be evaluated on these criteria by the judges. First would be the project's market potential. The judges will take a look at whether these startups have identified a genuine area of interest in the Web3 space and whether their proposed project is effective in addressing it. Next, the technical feasibility. The startup will be judged on how well it integrates blockchain technology into its project and whether the technology used is a relatively novel application. Third, we're looking at the scalability of the business models. The startup will be judged on how scalable their business model and growth plans are from a regional to a global level. And lastly, we're looking at the strength of the founding team. At BFG, this is something that's very important to us when we're looking at founding teams and Web3 startups. The judges will be evaluating whether the team has an educational background and past experiences to lead the project, and are they equipped and confident to deliver this project. So without further ado, let's kickstart the pitching and welcome Team Tide.
Hi everyone, it's Hugo from Tide. You can share screen now. Right, let's get started. Great to be here. So as you mentioned, Tide is a Web3 marketing and acquisition platform. Let's start with the team. The co-founders are me and Vincenzo, who's the co here. I personally have a background in AI machine learning, worked in the US aerospace industry, worked in the international sector, industry in Asia. What else? Vincenzo has a background as a lawyer, in private equity. With us, there is also Teodoro, who is an experienced entrepreneur in Italy for the unicorns. Paolo, who has 10 years of experience managing Web2 teams. And during the course of last year, we formed a high caliber engineering team with whom we won several grants and hackathons in the full Web3 system. We started as a team building in DeFi, but we transitioned to a marketing and acquisition area because we saw that we were solving our own problems and there was infrastructure missing. So let's start from this problem. Web3 clearly lacks marketing infrastructure. Web3 growth teams spend a lot of time doing a lot of initiatives that are not measured, that do not bring valuable concrete results to their growth. And in particular, we see a lack of data and analytics in the Web3 marketing space, leading to weak acquisition channels, a lack of tool capabilities to measure ROI, and inefficient retention and feature strategies. We are seeing this from most of the airdrops done in the last year, most of the so-called request-based campaigns. This problem causes several inefficiencies down the line. So we have millions of the airdrop allocations spent inefficiently per year, very low retention. We conducted a lot of research, more than hundreds of campaigns analyzed. You can check them on our blog. And we basically saw that there is an adverse selection problem in most quest marketplaces, where projects tend to attract only the worst users. And then another problem is wasted development time. Teams hacking in-house solutions for building referrals, for building special growth hacking solutions, but also marketing teams losing a lot of efforts without clear results. What we do, we start with building a performance marketing analytics suite for Web3 projects to understand what's bringing value, what the users are. In particular, we focus on on-chain conversion events. So we want to enable any marketing team to track events as depositing at least $100 and not withdraw from the platform. So specifically identify what's bringing revenue to them. And on the other end, we build data-driven campaigns that projects can embed in their websites to not only to cover the acquisition step, but also to cover retention and additional steps. By zooming out and see the whole market landscape, the Web3 current user journey is rather complicated. Before triggering the conversion event, which is here to the left, to the right, users go through several platforms that can be gamification platforms, quest platforms, social media, and so on and so forth. All these different channels leave some traces. Some of these traces are on-chain. We analyze what happens here on-chain, and we produce data-driven campaigns and insights to optimize also the other channels to acquire users. We are already live. We have very good traction despite being the bear market. You can see some customer testimonial there. Our ICP is currently DeFi protocols with their go-to-market and DAOs, but we are also speaking with Web2 companies to develop more white label solutions. So again, on the use cases, three main value proposition: the performance marketing to measure effective various ROI conversion rates of type, but also third-party campaigns. Data-driven on-chain campaigns. We are helping some projects distribute their tokens, and we just got 100K USD grant value from Optimist to distribute tokens in a series of campaigns. And finally, our most enterprise service is data-driven airdrops, where we basically help projects evaluate the customer lifetime value of the wallets and distribute tokens accordingly. Let me highlight also one of our two differentiators. Our campaigns can be hosted in our front end, so you can build them without being technical. But we have also widget and SDK for you to have a native experience. We want to go, our vision is that Web3 engagement will be in any website. We want to enable you as a business to incentivize users to do stuff on your website and be compensated with tokens and with NFTs. But can be also not action only on your website, but can be also social media. So here you see a screen on one of our clients that is embedding our campaigns. And the campaigns, as I said, can track different steps of the user journey. So it can be tracking campaigns that incentivize social media participation. It can be a campaign for a user that withdraws $10,000 and is asked to fill out a survey and participate into a raffle. It can be a campaign for competitor users to withdraw from competitive deposit in the target protocol with the gas rebate and additional fee, and so on and so forth. So we want to go toward a personalized incentive, personalized UX, and composable campaigns that any projects can build on top and can integrate in any website. Regarding the market, the landscape, the Web3 marketing is a crowded sector, but we are very different from traditional Quest platform that you may know as Galaxy Quest 3 Layer 3, as we offer specifically much in-depth performance marketing and data-driven campaigns. So we want to do to a very granular level, and we actually care a lot about signal protection and targeting and bots. Our closest competitor is Season Labs, which is an engagement platform, a Web3 engagement platform. It's focused on gaming. The main differentiator with them is that the embeddability, the SDK, and the fact that we're focused on DeFi, whereas they're focused more on gaming. So regarding market size.
Hi, Silvio. I just have to jump in here and let you know that the time's up. Maybe you can just wrap it up with the last
slide.
sentences.
Let me just say that Web3 unlocks a new design space for advertising, as this unlocks the possibility to exchange value between business and users. And we see this going much beyond the initial Web3 sector. As a matter of fact, we are also in talks with Web2 players to develop innovative programs on their user base. That's it. Keen to hear your question, and thanks for having me here.
So thanks for that, Silvio. Now we'll move into a time of Q&A with our two judges. David presents. Maybe do you have any clarifications or questions for the team?
Yeah, I just wanted to ask, like, how long have you guys been building it? And could I go back to like the traction phase? Like, could you talk a bit more about the traction side?
Yeah, so we started building it last September, so it's not even a year. As far as for the traction, we have some paying customers in the enterprise tier 4. Then we have 20 projects that are using us as design partners. So they are for free, but we are going to monetize them in October, September. Our price, we work as a SaaS premium. So we have some projects just doing campaigns for free. Then the trigger to upgrade is the analytics section. So if you have campaigns work and you have a lot of users, you probably want to upgrade. And then we have the custom campaigns, the enterprise tier. So on the enterprise tier, we have 4 projects right now. On the middle tier, we have 20 projects right now. And then we have 30 projects, small businesses using us in the free tiers. We have a rather good retention, more than 60% 1 month for businesses. So at this stage, we believe it's very good. And we have 30K active user reach every month by campaigns. Let me stress here that these are users whose wallet are meet certain criteria. So they have decent order history, they have decent balance. We are tracking continuously these metrics. You can see also on our website, the platform is live. And our wallets, let me just add, have 20x balance more with respect to other competitors. And this is because of our targeting system and visible system.
David, do you have any?
Okay, and Silvia, I have a question. From the team, I see you are 3 co-founders. Is any of the 3 co-founders like has a background on marketing or has worked in marketing before? Also, you touched a little bit on the business model and the revenue model. If you can expand there, that would be great. And the last question is like, if you could talk about any specific client you choose, your favorite one, what you have done for them, the Tide is helping them in their marketing campaign. So those are my questions.
All right, so first, regarding marketing background, we started working on this because we were building in DeFi. We were building DeFi applications. So we experienced that there were some problems there. And so as though we don't have traditional marketing background, we experienced the whole pain points of launching the product in the DeFi space, in the Web3 space. And also one of our co-founder, Teodoro, comes from Web2 and has like a lot of background in the like Web2 traditional marketing space. Second question, what about the business model? So again, it's a SaaS business model so far. It's freemium. So for the free tier is for small creators and small Web3 businesses that just launched engagement campaigns. So they are small companies. The middle one is for DAOs or DeFi projects that go to market. It starts at 300 per month and goes up to 800 per month. And the premium goes from 1,000 per month up to 2,000. Regarding the customer, I also have a slide with the use case. Maybe I can quickly share it. The background slide.
Yeah, maybe choose your favorite,
Yeah. So this is our the client I'm most proud of. It's called MacP. So basically for them, we developed some data-driven campaigns using user CLV. They are a bridge. And we also, you can check our blog for our research on user CLV and bridges. So with us, they are doing the entire go-to-market. They are basically using dynamic NFTs that change according to the user CLV, on-chain actions. And they're using it as profile picture on the website. And then do the entire measurement and tracking via Tide. I like them because for them, they have a lot of switching costs because once they plugged in their on-chain data and they are using us as provider, they know that they're embedding us in their website. It's very hard for them to switch. So I think we are creating a moat here with these kind of campaigns that competitors not doing. So the main value for them, again, is to be able to access analytics and data-driven campaigns without developing time, with only a few lines of codes on the website. And it's going very well. So like they started another campaign last week. They got more than 1,000 wallets so far. So yeah.
All right, thanks everybody for that. Thanks, David. Thanks, Presence. And thanks, Team Tide, for taking the questions. We'll move on to the next startup now. And yeah. Can we have Team Profiler? Yeah, when you're ready, Sean.
Cool. I was just checking the mute buttons were popping up in front of me. So thank you, everybody, and for the opportunity to present Profiler to you today. At the end of this presentation, we believe you'll see why Profiler is you and yours. We fundamentally believe the internet is made for people and made out of data, but I'll leave that to the end where we can convince you of the value of Profiler. Just introducing you to the core team, which I'll do briefly here, sorry. There's myself, Sean Jensen. I'm South African, but living in Switzerland for quite a while. Background in global telecommunications, in product, networks, design, delivery, and service ops. Managed to exit a small startup in the 90s. Michiel, co-founder in Belgium, is a data and IP lawyer, but also exited a Scooty startup quite a few years ago. And Luke, the third co-founder, is a digital marketing expert in bigger industry. The rest of the team that really complements our skill set is key technology and Web3 with Kuba. Ipek is an engineer, but also operations and product expert. Iana wraps up our marketing function. The rest of the team that are helping us in design and product management, Mitchell Leiser, and a couple of very smart individuals helping us to code away at the future. So if I jump back into the problem statement for Profiler, which is a significant one, and we started the journey 5 years ago in solving for privacy. So the three areas we're focused on is digital privacy, data harvesting, and social conditioning. All of that being significantly accelerated by AI. So what do we do about it? That issue, though, creates a market opportunity because we all know privacy has become a major thing. Companies are getting fined every second day, and companies are really looking for a different way to communicate with their customers without tracking. But brands are also focusing on better quality data. So how do I get an evergreen source of data to be able to communicate and personalize services to my customers? And people want better stuff, okay, from companies. So that's where Profiler comes in. We believe you have one superhuman power left, which is choice of what data you share with companies in exchange for value. And what we have built and is ready to launch for trials, closed trials in September, is a Web3 personal data relationship and permission marketing platform. We name it that because it is a combination of the stack that you see on the left, a bit of CDP built in there, a preference center, basic CRM, and also an advertising channel like Instagram. But in the future, people can use it to share content with each other or with a brand in exchange for content back in value. So how it works is people will create their own profiler, they'll invite people to view their data or companies, and then they'll be able to set preferences as to how often do they want these companies to communicate with them and when. In this platform is a built-in rights management control layer. So you're always in control of your data with any company. And then the company can decide how they're going to please you with their content. In the future, you'll be able to share information back. So there's like a bit of a mashup of Instagram and Salesforce, we call it, but with zero surveillance and controlled by you. In the platform, we have a token, which is mainly a rewards mechanism to help people to build a valuable profile of themselves, which is a new behavior. There will be some other approaches to how we use that in the future. Our Web3 stack is very clearly defined. We've been well funded by the tech community. So digital identity for privacy of how do you share data peer-to-peer, making sure that Profiler does not interfere with your decisions. A good ledger for every decision that you do make on sharing your data, and then also some of the latest technologies around how do you control your sharing with contracts. We are a research-based company. We've got 2 prime research projects that have been funded, one by Swiss government and one by ourselves. A key one there for us is zero knowledge advertising. So we've developed a protocol which we'll be implementing in 2024, which will only enhance our tech stack in making privacy better online and giving companies a better alternative to the third-party cookie. Some of our competition and where we see the future. We see the past is this older web where you tracked and you nudged and it's invasive and distracted. In the future, we want a private, more mindful and exclusive experience that you control online. So we often get compared to Brave, but we'll tell you later why we're different. And also some data marketplace platforms. But again, we've got some very key differentiators in our focus. Our go-to-market is B2B2C. So companies invite their customers onto Profiler. And we're only interested in the interest phase of a life cycle. So we're not awareness marketing platform. We help companies to change their customers' opinion of that brand by cultivating better interest and then the whole lifetime value behind that. Our revenue model is 2, it's data subscriptions, which revenue gets passed through to the individual, and also similar to Brave, an attention metric. So you take a share on any content that you view, and Profiler takes a transaction fee on that. In future, we will look at e-commerce, which has already been asked for by some of the pre-trial brands that we've spoken to. Our traction to date has mainly been on research. We did 2 or 3 years of research projects and then got grant funding to experiment on Web3. And now we're actually closing out a seed round, which will help us get to our trials in September, October, towards the second half of this year, ready for production scale launch in January. I mentioned we're closing a seed round at the moment. So for us at Profiler, that is the ultimate choice, is how do you in future unlock choice yourself in being able to control your data, control your experiences across the whole internet. And I'm looking forward to any questions.
Thank you so much for that, Sean. We'll move to the Q&A segment now.
Yeah, Sean, I got a question. What chain are you gonna build this, or are you building Profile on, and why? And also, do you have an estimation, maybe, I'm not looking for a real number, an estimation of how much a user can make per month or per year by using Profiler?
Perfect. So our architecture is chain agnostic by design, but we've worked with Cardano and the community for about 4 years. Main reason is we love the research approach, and the community has funded us because they love what our project stands for. However, we have a firm intention, and we are looking at alternative chains at the moment if they're better at certain portions of technology. So that will be our roadmap for the future. But to date, we're pretty satisfied with what we've got on Cardano. Others like Polygon and and 1 or 2 are really standing out when it comes to ZK digital identities. So that's an interesting one for us at the moment. As far as how much you make out of your data, we're very different to our competitors. There's a lot of people, great apps like Swash app and so on, that are telling you to harvest your online data and then sell it through a data aggregation layer as almost a basic income. We do not promote that, okay? Because at best, from research, you'll get a couple of dollars, maybe up to a couple of $100 or $1,000 for medical research for your data. We tell people to use the value of the data as a contractual relationship, and we open market our platform. So if a company says, I'll give you 1 cent or $1 for their data, and you're happy with that, then we're also happy with that. And that sets a market price over time. Will the value of data increase over time? We 100% believe so, but we don't want people to think that this is a way to monetize data. Rather, monetize the value you get in exchange in the right data with the right company in exchange for value back. Hope that answers your question.
So they will have to come to me and offer me a price of the data I've been accumulating on Profiler?
Correct.
One by one case?
Correct. At the beginning, yes. So the way the business model works is we believe companies should change their model first. So a company will invite you to the platform. You will create a zero-party data profile of yourself. So we don't include any third-party or surveillance or observed data in the platform. You create a profile. They subscribe to that, and if you accept and consent, then they can communicate with you and market to you. And just one clarification, it's not just for marketing. We've done trials in clinical trials. How do you share data? How do you share data with your doctor around a remedy itself? And then over time, you can vote for a brand to come onto the platform to say, come and have a look at my profiler, and then they can subscribe to you. And again, based on their offer for your data, if you accept, then you get into that sharing relationship afterwards.
Okay, thank you.
Interesting. I was just curious, when it comes to I've got 3 questions. When it comes to fundraising, how are you guys going? How's the raise going so far? What are you guys looking for at the moment, and how are you going to spend that money? If you can just quickly, we don't have much time, just share a bit. And when it comes to go to market in terms of partners that you're looking to kind of partner with, what kind of brands are you looking for? And if you need a connection with Polygon, I also have that as well. Just
awesome. Thank you. So yeah, it's obviously a bear market at the moment, but most of our investors have been angel funders at this stage. We don't have any lead VCs yet, but for this seed round, we are looking for a lead VC as we get ready to production. So that's a good thing for us. And we're raising 1.2 to 2.5 million for an 18 to 24 month runway, which will take us through to a revenue model and a flat revenue. So neutral on cost. And then the second was around the partnership. So we're looking at sell with and sell through with agencies. We've got a relationship with Publicis in Bulgaria at the moment, and we're working with how do they take this proposition to brands as an agency. And we've also got an NDA signed for quite a long time for our Web3 projects with the likes of Omnicom, looking at how will Web3 impact the whole marketing ecosystem in the future. Our target brands at this stage are CMOs at top level. So in the past 3 years, we've communicated with brands like Rolex, Coty, and a few verbally trials like Jabra and Radisson Hotels. Not saying that we don't have an SME focus. Our trials were on local SMEs in Switzerland, and the value prop is exactly the same. Just on pricing model, so there's no barrier to entry. We have a very low cost model, so they can invite one person and communicate with one person or 1 million. So there's no SaaS lock-in fees or whatever. It's more a land and expand strategy. And yeah, second half of the year focus is definitely to implement our Web3 strategy. We received good grants, about $500,000, just to experiment on that from the Cardano community. And then we'll implement and be ready for production after trials in January.
That's great. Thanks so much, Sean. Thanks so much, Presence and David. Time's up for Profiler. And so now we'll move on to Team Modus, but do keep the questions coming. So I'll just bring Elliot on.
Hi guys, let me just share my screen. You go. Right, so hello everyone. My name's Ali Khalil. I'd like to introduce myself as a co-founder here at Modus. Our mission is to fractionalize access to development market, helping our members build their own future. To achieve this, we built
me, or we can't see your slides yet.
Oh, that's never good. Bear with me.
Okay, yeah. Maybe you just go into slide. Yeah.
Okay. Well, I'll do it without a slideshow then.
Yeah, sure.
Got it.
We can start again.
So I'll start again. Okay, so our mission is to fractionalize access into the property development market, helping our members build their own future. So to achieve this, we built a solution that offers our token holders never seen before access to real estate development investments here in the UK, all through the use of Web3 infrastructure. I suppose I've already mentioned Modus started a solution. So the best way to describe the solution is to get into our origin stories. 2 years ago now, one of my co-founders, George Henderson, was working with a property development fund in the UK. They spotted a gap in the market. So there was a plethora of undercapitalized developers who could obtain bank funding, but didn't have the equity to put into the projects themselves. So they set about taking clients' money and investing it into highly lucrative development projects across the UK, offering extremely high returns. These clients were made up of high net worth individuals and family offices alike. This fund, however, was frequently approached by small ticket size investors who were increasingly frustrated with low returns and the turbulence of the stock market, and believed in the concept of putting their money where they could see it, in bricks and mortar. And this really got us thinking, what if we could build the most efficient, smart, and seamless way to address both of these needs seamlessly on-chain? And Modus was born. So how does Modus work? Modus is a token-run platform offering developers the opportunity to list their prospective projects for equity investment. Our Modus investors simply need to purchase and stake their Modus Access tokens, fulfilling our one-time KYC, connect their wallets, stake, and get investing in USDC. Each development is held within an SPV, special purpose vehicle, meaning investors gain added security of real-world ownership for all their investments, all signed and downloadable on our platform, no matter where they are or how much they have to invest. So by structuring these investments as equity, we're able to bring access to the masses. So the natural question then becomes, why blockchain technology? Well, the short answer is, without the efficiencies that come with self-custody, a trustless system that doesn't rely on any intermediaries or expensive intermediaries, using smart contracts to facilitate the investment purchases, Modus would be too expensive to run, and it wouldn't have the network effects that Web3 models offer. So we also believe that people are beginning to change the way they invest. So I mentioned self-custody. Self-custody and blockchain technology are no longer becoming mainstream. They are mainstream. The Web3 market, as it says here, is expected to grow to over $80 billion in value by 2030. And studies suggest that over 49% of all millennials currently own digital assets. In addition, we believe the Web3 world's maturing. So crypto holders are looking for increased real-world users for their cryptocurrency and oftentimes safer investments. Not many asset classes are seen to be as lucrative as bricks and mortar. In fact, there's a stat that we discovered that suggests that the property market has beaten the UK stock market by over 80% since 1989. So that's a fun fact for everyone. So a little more about how our tokens look. So as mentioned beforehand, Modus is an allocation token. The more you own and stake, the more USDC you can invest in projects. As you can see, our allocation tiers here. However, its purpose doesn't stop there. Modus is finite, meaning as demand for our platform and access to it rises, so does demand for the token. In addition, we firmly believe in building Modus into an investment ecosystem for decades to come. Therefore, fees generated by the platform are automatically incorporated into a buyback and burn mechanism and treasury replenishment and other uses. So in terms of revenues, hopefully everything sounds clear. I'm sure many of you are asking, how do we monetize? Well, every time a developer lists and raises for a project, they're levied a set of fees for the platform. Whilst these fees may seem high to the lay individual, they're well below industry standard. The average fees charged in industry is a 20% coupon per annum that's levied by high net worth investors and equity houses who also take a substantial amount of the upside at the end of a project, up to as much as 60% of the upside of a development project, leaving a developer with only 40% of the profit from a project and the profit incorporated in their construction price. However, by fractionalizing the equity amongst smaller investors, as well as assuming the role of an equity house, Modus can pass on a sizable discount to developers that traditional funds just can't provide. So for every project listed, developers pay an asset management fee of 4%, as well as a listing fee of 0.5%. And upon exit from a project, they pay the platform a 10% exit fee. So compared to the traditional equity houses, by using Modus one time, on average, they reduce their costs of access to equity by over 4 times. So let's meet our proper director. So I suppose, finally, who are we and how do you know that we know what we're doing? Well, if you remember, I mentioned the property fund that I discussed 12 months ago. They decided to join Modus because they believed in the project that much. And they brought with them extensive access to development opportunities, as well as an extraordinary amount of knowledge and expertise for appraising these projects. You see Mark Williams, who's our property director. He came from Clydesdale Bank and was in charge of lending a book over, I think, 250 million at the time. Our wider team. Starting from the far right, as you see here, our legal models have been thoroughly vetted and structured by a team who reside at Reed Smith Law. We then move over to the platform development partners, who worked on projects for names such as obviously Microsoft, NASA, and the development team's headed up by our co-founder and CTO, Mr. Eve, who we'll discuss later. And further on, you have our tremendous marketing team, and not forgetting, of course, our great property team, Mark Williams, who I've already mentioned, and Guy Lindsay. In terms of our co-founders, Eve, as I just mentioned, is our blockchain architect. He brings with him 6 years of experience in business development startups. His passion for blockchain's potential to create value for all stakeholders led him to design our whole Web3 architecture, really. George, our other co-founder, is a seasoned VC with a track record of funding tech-based companies, bring them from idea inception straight through to launch. He's over 5 years experience in the tech industry and brings obviously valuable insights. And finally, myself, as a former investment bank analyst and digital transformation consultant, I turned to a real estate investor quite a few years ago now. And since 2017, I've had quite a profound interest in blockchain and cryptocurrency myself. In summary, Modus embodies a powerful movement. So we aim to democratize property investment and allow everyone to participate. Our mission is to establish an all-inclusive ecosystem that nurtures financial growth and enables wealth creation, irrespective of one's background or financial standing. So together, we aim to redefine real estate, ensuring it becomes accessible and safe and lucrative for all. Thank you.
Thanks, Elliot. We'll now move into the Q&A. David and Presence, do you have questions for the team?
Can I ask what stage is it at the moment? I don't know if I missed it or not, like the stage and what and also I'm not like an expert in like, you know, the real estate space, but do you anticipate any like regulatory challenges, and what other challenges do you think you might come across, and if you thought of like ways to fix them?
Yeah, of course. So in terms of stage, we've earmarked our first development project to be raised through the platform for Q4 this year. As I mentioned, we set up a development arm as well as Modus on the side to cater to the developments we look to onboard, so for scalability reasons. And they've carried out 4 developments independently. So we've got currently 4 projects that we look to on list into the platform, but the first one's at Q4 this year. In terms of raising, we've just opened our seed round now, and we're basically relying on our pre-seed partners who are all, let's say, soft committed to raising for the seed as well. But yeah, in terms of the regulatory stance, that's actually what was one of the biggest challenges for Modus right from the beginning. And it's a reason that I always proudly say we are one of the guys doing this. What we do is we follow an equity model. And what that means is we rely on cornerstone investors. So when investors on our platform purchase access to development projects, what they're doing is they're buying a private sale of shares. Therefore, we're not a collective investment scheme, or what the FCA now would define as a speculative liquid security. We circumvent all of that, which means you don't have to be a sophisticated investor. You can be a retail investor and invest. We set the minimum at $100. You can really invest $1 USDC, but for us, it makes sense to 100 USDC. So in terms of regulations wise, we're fully compliant. Yeah.
Sorry, last question. Like, where do you guys want to get to? I've seen something. It's not really the same. It's in the US, and it's more on like individuals can buy tokens, and basically each month, they get like a piece of the rent.
Yeah.
Which is a bit different from what you're doing, but like, yeah, I'm just curious. Like, are you thinking of like expanding in the future, or like where do you guys want to get to? Yeah.
So obviously, we started with development because basically it started as a pain point with me and some of the co-founders as well, that no one, at least in the UK, really could get on the property market. So we thought, well, if we can't buy them, let's build them, which is where we started. And we're really looking at expanding abroad. So first stage of growth is we've earmarked 80 million in GDV, which we have sites ready to do as long as we have the investment capable through the platform. And we've earmarked that for Q2 2024. Obviously that's GDV, so we will enter into the projects then. And then later on, we want to expand into different regions. The next region we're looking at the Netherlands. And after that, as I mentioned before, we want to build Modus. All money generated by the Modus platform from developers is incorporated in the Modus ecosystem. So ideally, we want it to be a community, a hub of investors for different asset classes, where the Modus token gives you access, but also stands as the reward.
Got it. Thank you.
In terms of Elliot, thank you. In terms of the tokenomics, have you designed them with any third party, or who has designed the tokenomics? For what I understand, you can get into the development project in USDC. So how do you see the Modus token accruing value over time? What is the utility, on top of like if you have access to the projects? Who have you worked with? How are the tokenomics? What is the total tokenomics for Modus?
Yeah, no problem. So, I mean, I can share with you after, it was obviously 6 minutes as time pressure can go through all the tokenomics. So I can share the tokenomics with you after. In terms of running, I think the best way to run through sort of where the value aggregates and goes into the tokenomics. Yes, so you invest in USDC, and the fees that I mentioned that are levied upon developers get taken by the Modus platform and incorporated into a token burn, right?
Yeah.
So what we do is we buy back and burn. We buy back, send the tokens to an Ether address, burn those tokens, right, as a finance block tokens. So you continuously send the income generated back into the value of the token process. In terms of tokenomics themselves, they're developed in-house by our CTO, I think is in the audience. Eve, are you there? Oh, there he is.
Hello. Yes, Eve here.
So Eve can
but also the tokenomics side, it's also to do with the demand, right? So with two-sided platforms, you have more developers on one side, and then you have more, demand from users. So as demand rises from one side, then more developers will also list on our platform, and you get kind of this network effect, this platform theory, where you have both of these parties creating demand for the token, and as there's more demand, prices should increase theoretically. But then also included is that token burn, and that token burn will of course help with extra demand, and that's how we. Yeah, it's based kind of on a launchpad model. To be honest, that's a lot of launchpads use this type of tokenomic system as well, and but we're just using it for development, and
similar to TrustSwap as well, if you obviously know TrustSwap.
Thanks very much, team. The time's up for your Q&A and your pitch. Nice to meet you, Yves. We'll now move on to Aisha and Mani from Creatorhood, our final team to present.
Super, thank you very much. Are you all able to see my screen?
Yep.
Lovely. Before we jump in, so my name is Aisha. I'm one of the co-founders at Creatorhood. Mani's also on the call. He's my other co-founder. We are an NFT marketplace and creator monetization platform. And where we really shine is in 3 key areas. One is we're trying to make it completely frictionless for creators and their communities to come into Web3. We've built the payment rails and infrastructure to facilitate that. 2, we're really trying to innovate around utility, and we've created a new class of NFTs, which are utility NFTs, and we're putting all of that information on chain. And 3, we're really trying to protect the lifeblood of the NFT space, which is creators effectively, by protecting their royalties through an on-chain mechanism. So with that, I will jump in. You know, the big problem that we see in this space is that, you know, despite it being a very large market, $15 billion market, there's really a small number of creators who have ever created an NFT. And just to put that into perspective, it's only about 25,000 creators that have done that. So that's a really tiny number. And there's a huge opportunity here because effectively there are over 130 million content creators out there. So we really truly believe that there is a lot that can be done to grow the space. Now, the question here is why? Why haven't more Web2 creators come into Web3? And frankly, it's hard. We may not see it as hard as folks who are in the space, but effectively, there's a lot of friction that comes in from having to set up a wallet, having to learn about the space and crypto and understanding how that works. And for the first time when you're listing, getting your wallet set up, paying for gas, there is a huge drop off because folks find it too hard. Now, and if you are lucky enough as a creator to be able to get over that barrier, you need to then convince your community to do the same. And so best case scenario is your fans and your communities come in, they kind of go through the top rail here, which is really setting up a wallet and going through the whole crypto flow. The second rail is more so, you know, what you might see on an OpenSea or with MoonPay, where you still have to undergo KYC because ultimately crypto needs to be converted to fiat in the back end in order to facilitate those payment rails. So what we've done is we've really tried to abstract fully all of that friction. So it's super simple for creators to come into the space. They can, in less than 2 minutes, come in. They don't need to create a wallet. We auto-generate a self-custody wallet for them. They don't need to do anything around crypto or gas. We do lazy minting. And very importantly, when there is a sale and they're paid in fiat, we actually pay them directly into their bank account. For the buyers, there's 2 flows. One for the Web2 side is it's super simple. It really mimics an e-commerce flow. So they don't need to know anything about crypto or Web3 in order to come in and buy that collectible from their favorite creator. Equally for the degens, it's very simple for them. They just come in, connect their wallet, and they can transact as usual in terms of signing for transactions. We felt it was very important to do it this way because we are actually bringing creators into Web3 when they're ready for it. So the first time that they actually receive crypto into their auto-generated wallet, we take them through a journey to actually then get into Web3. So we're picking the point in the journey with the least amount of friction and also the point at which they're most incentivized when effectively they've gotten paid. So where we really sit in the landscape of things is that among other marketplaces, we can do things like minting, we could do trading of third-party NFTs. We have the ability here to mint utility NFTs, which I'll get onto in a moment, and we're really strong in terms of being able to onboard the masses, which we believe is super important to expanding the space. And we're also, a place where it's two-way for both the fans and their creators. We're really the only place where fans can really be part of their creator's success. So what we've done in terms of putting that utility on chain is we worked during our beta with 1,000 creators and their communities to say, what is it that you're really looking for in terms of what you want from your creators in Web3? And it was really around getting a share of that upside, IP rights, getting exclusive access. So, getting early access to things like merch or product releases, in real life events, and then a lot around things like video calls, tutorials, DMs, and things like that. So we've actually created 2 new EIPs where we're putting this information on chain. So for the first time, when similar to NFT traits, you're actually seeing a lot of that specificity around the NFT put on chain. So things like the type of utility, how long it's available for, specific terms and frequency that are being offered. The second EIP, importantly, actually links the access to that utility to whether or not every buyer in the chain has paid royalties. And this is super important because in the last sort of 6 months, just to put into perspective, there's been over $120 million worth of royalties that have been missed out by key creators and collections in the space, because there's no real way to enforce royalties. So our EIP kind of helps with that, because effectively it says that as long as you are paying the royalties, you can access that utility. If you do not pay royalties, then the creator does not receive that, or the collection does not receive that, then that utility turns off. And that's important because a number of NFTs are quite useful because of that utility, being able to attend special events or being able to use that IP commercially. So just in terms of wrapping up kind of who we are.
Unfortunately, time's up. Please wrap up your presentation. Thank you.
Sure, just to kind of give a sense of who we are. So I'm one of the co-founders. My background is I was a dancer. I went to Harvard, and I have done a lot on the product and marketing side. My co-founder is a trader. He headed up a large hedge fund very early into crypto kitties at the very outset. Our CTO is a very seasoned Web3 architect, and we also have Josh Ong, who's our Chief Strategy Officer, who's one of the key folks in the Web3 space, early collector, and very well known. Thank you very much.
Thanks for that. We'll just move on to the Q&A now. David, Presidents, do you have any questions?
Yes. Well, thank you, Ayesha, for presenting Creatorhood. Congratulations. I think there is a clear market fit. I've been looking for someone trying to solve this problem. So I would just want to ask, so are you raising money right now? What's the state of the round? Do you have any hard commitments already? How much is left in the round? And what are the imminent next steps for you guys?
Hey, David, I'll take this one. Yeah, we are raising money right now. We're doing that through both equity and token, total size of around 4 million plus, 45 million. And we are in advanced discussions with some leads, but, and you know, there is pretty meaningful interest.
Okay. Okay, I'm interested. I'll continue talking later.
All right, Presidents, do you have any questions for the team?
I forgot if we mentioned it, but do you have a go-to market strategy, and what's the stage at it right now? Sorry, missed a little bit. Yeah, like in terms of how do you plan to, scale and get more users, I guess, would be my question.
Yeah,
and
so
be needing as well, like partners and stuff like that.
Yeah, so partners, we've got Polygon, we've got NFT Go on the Web3 side, and on the Web2 side, we have Nuvei and Payoneer, which are 2 NASDAQ listed companies. In terms of what stage we're at, we have over 1,000 creators, go to market, and we had a 20% join rate on those from the creators on a cold email, pan genre, so not just visual content. In terms of go to market, on the Web2 side, we're going out to another 150,000 creators over the next couple months. So if we get that same join rate, we'll have more creators than exist today in the Web3 space. On the Web3 side, we're looking to connect those Web2 creators to Web3 buyers. So, and we're doing that by releasing a native token. That native token will have strong incentives, specifically around revenue share. So token proceeds will go to token holders. Sorry, platform revenues will go to token holders. And so there'll be multi-stage airdrops and incentives around that to kind of bring folks in on the Web3 side, and then equally the Web2 folks can go to their existing inbuilt communities as well as Web3.
And your revenue model is like a revenue share. Is there anything else?
Yeah, so we get a 2% platform fee, and that platform fee gets distributed to token holders.
Thank you.
Thanks very much. David, I don't think you have anything else for the teams, right?
I don't have more questions now.
All right, awesome. Present, anything else? Okay, awesome. So that will be it for the pitching segment of today's pitch event. Thanks so much for the 4 teams for coming on to pitch. So right now, Albert will be taking us through a couple of announcements while we tally the scores and then announce who are the top 2 startup teams for this round. I'll go ahead and share my screen.
Perfect. Thank you, Melissa. Thank you, everyone, for the pitch, and thank you, dear judges, for the comments and questions. Now that we are done with the pitches, let me briefly introduce you about our incubation and accelerator program. We have 2 programs coming up soon. It's called Blockchain Founders Group Superstars Program and also the Adrenaline programs. With both programs, we are taking a huge bet in the blockchain ecosystem, where we believe the application of the technology will be able to tackle currently existing problems due to decentralization. Our program runs twice per year, and the upcoming one is the season 4 for the Superstars, which will start in September. The application phase has been opened, and the deadline to apply is August 12th. You can simply scan the QR code here to learn more about the program. We provide mentorship and funding for your business as well. Our focus areas are DeFi, NFT, DAO and governance, data first, identity and privacy tech, and many more. Regarding the program, it is 100% online and remote, means you can join from anywhere in the world. Our past cohorts of participants spread across continents, not just in Europe, but also in Asia, Australia, and also in the Americas. For the program, we built within the program for 3 months. At the end of the program, we invest between 70K to select teams. And if you have any further questions, remember to join us for our MA sessions. One we have already yesterday, and the upcoming one will be on August 8th at 11 a.m. My colleague Max will answer all your questions regarding the program. So stay tuned and make sure to join the program. And back to you, Melissa, to announce our top 2.
Thanks very much, Albert. Just give me a moment to toggle between the slides. So our scores are in. We're very excited about announcing them, as I'm sure you all are. Yeah, so thanks, David and Presence. We have our top 2 teams. And in second place, we have Team Modus. And in first place, or you could say it was the judge's favorite, would be Team Creatorhood. Your congratulations, guys. Your pitches were really smooth. Your ideas interested the judges and they sounded great. And with all of that, we would like to thank our judges, startups, and viewers today for spending the past hour with us and for making this event so successful. The event recording will be available on YouTube after this, and the link will be sent out to all participants as well. If you would like to get in touch with any of the startups that are pitching, you can feel free to reach out to any of us on the team. And if you would like to attend future editions of this pitch event, we do it monthly, so you can just join our next month as well. Follow us on LinkedIn, Twitter, or subscribe to our newsletter to get marketing emails and notifications. So we also do have a post-event survey that you can scan and complete to leave feedback, as well as maybe tell us things that you'd like to see more of in future editions of the pitch event. So with not much else, I'd like to thank everybody today for attending on Zoom, on YouTube, for spending your time with us today. Bye-bye.
Thank you, everyone. Have a nice day.
Thank you, guys.
Thank you all very